please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
This is Bazaar Morning Call, live from the CNBC TV 18 headquarters in Mumbai.
Good morning, welcome to everybody, and once again a happy Eid to all of you. It was the happiest of Eid, wasn't it? Only it lasted all of 10 minutes on the cricketing field with the last wicket falling and India finally registering a victory, and people now actually talking about India getting possibly to a 3-2 win in England. But anyway, let's see. That at least left a good taste in the mouth to enjoy the holiday. For the markets, actually, it's actually looking like a holiday mood. One is not able to get any firm cues. The global cues over the last 48 hours have been reasonably green. So since we have to react to 2 days, and the day before was good for Wall Street and for Asia, it's actually a little bit green as far as where India left. But we were very much catching our breath on Tuesday, not really showing any indication of breaking out or breaking down, though the lows clearly were bought. But we'll have to really wait and see. Today, as far as we are concerned, dollar is weak. That's good for equities. Yuan is up. That's again good for Indian equities. But crude oil has snaked up now very close to $75. So that may be seen as a minor negative, especially because we saw 71 and change as well. So really, no results to react to. It does look like the market has to find its feet today and tell us where it wants to go.
And the market has been doing quite well, right, on that accord. I mean, it's been finding its feet and how. It's been quite stable. Also, on the global cues, the minutes from the latest Fed meeting were also out, indicating or reaffirming the hawkish bias of the Fed, and perhaps, you know, a lot of support coming in for another rate hike in the September policy. Talking about the Fed and global cues, I mean, this has been the longest rally that we've seen in the US markets in
we've heard it again and again.
We've heard it again and again. Yes, we saw that tweet that came in from Donald Trump as well. I mean, this rally started way back in 2009 and it's still on. So I guess the global bias is still on the upside. Anuj, morning. Lata was talking about how we didn't have any wins in cricket, but we had so many wins in the Asian Games, right? I mean, 4 gold, 3 silver, 8 bronze. I mean, the tally is picking up. You think the market tally will pick up as well?
You know, Sonia, morning, Lata, morning. I normally wear this combination when I have a premonition of a massive rally in the market, you know, all green. The only problem is this morning crude is back to 75, and this move is rather sudden. You know, this move that we have seen in Brent crude. Can it spoil the Indian market party? Because for last few days the market was ignoring the dollar rupee, the other equation, only because crude was back to 70, 71. That, I think, is an irritant. I will find out how much of an irritant it is. The template is one step back, two forward. I think one step back was taken in the first half on Tuesday, before the market holiday. And, now the opening itself should be above 11,600. That's what the SGX Nifty is indicating. If opening is above 11,600, that would lead to, even the stronger bears covering perhaps. The Bank Nifty is the key because that's still some, 150 points away from its all-time high. 28,400, 28,380 is that level. So 28,400 is crucial. If you start to trade above that, you're going to see a lot of, buying perhaps. But this month has been really about the market broadening. I think, at the risk of repeating myself, this really has been a good market for bulls because the Nifty is up 2%, the mid-cap index is up over 4%. That way the market has broadened. And I think you'll continue to see that. Perhaps, the mid-cap Nifty Junior outperformance will continue for some more time. And a lot of stocks where you had fall because the market was down. They are already recovering. And the market leadership is now with corporate banks. You saw that on Tuesday as well, the way Axis rallied in last half an hour without any news. Reliance, that's done really well. And Pharma. Pharma's, showing a second move. And that's also quite healthy for the market. All in all, let's see. I would want to see how the market reacts to this crude at 75. That has sort of been a bit of a change in variable because the market had thought that 75 was peak. Now let's see if you can.
The better part of the 2Q results came when crude was well over 75. So I don't think if the bulls have a good thing going in terms of a 25% CAGR in earnings this year and the next, and there's visibility on it, this should not be that big a negative because we've kind of been there, seen that. But then it's also coming at 74.5 when rupee is at 70. At that time, we had the advantage of at least rupee being at 68.5, 69. So yes, I take your caution on board, though I still think the advantage is with the bulls.
No, completely. I'm saying that, there's a good chance that today you have 11,600, and of course, way above that, there's a good chance of 100-point rally as well on the Nifty. The only thing I'm saying is that that's an irritant, and I would want to see if that sort of plays any kind of spoil spot. That of course is the right.
Is the thesis? Yes.
Oh, absolutely. And also one space to perhaps look at this morning would be the consumption basket. We had two analyst meets over the last 48 hours, Dabur and Nestle, and the takeaways were really positive. From Dabur, they raised their volume guidance to double-digit growth for the rest of FY19, and Nestle also said that the responses to 39 of their new launches has been really good. 25 of them were received very well. So let's see. I mean, this is one basket that has been doing quite well. Let's see if there's any follow-through buying.
Regular announcement on the exchanges, just about every companies or most companies are talking about an upgrade in their rating. So you can see the improving health, in all these small anecdotal evidence as well.
Okay, well, we'll talk about all this and more through the course of the show. For now, let's kickstart and tell you what our wise experts have to say as we get into trade this morning. Ridham Desai of Morgan Stanley says, consumer staples have been outperforming for the past several months. They, however, have been underweight and wrong. So the question arises, is there a bubble in the sector or is it time to capitulate and buy? Ridham says the short answer is neither. There may still be some pain left as the sector may take time to top out based on where relative valuations and performance are versus history. In the meanwhile, the relative trade in favor of consumer discretionary looks more attractive. Ridham adds that they are overweight consumer discretionary with Eicher Motors, Bajaj Auto, M&M, Titan and Z Entertainment in their focus list. Morgan Stanley's only consumer staple stock in the focus list now is ITC.
Okay. There's more equity calls coming for you. G.V. Giri of IIFL says after a short hiatus in early FY19, earnings downgrades have resumed. Okay. However, most of the downgrades are limited to consumer discretionaries, PSU banks and telecom. Barring these, earnings estimates have been broadly stable. Giri, however, adds that the recent correction in commodity prices, along with the rise in interest rates, are key risks to FY19 earnings estimates. So that's caution for you.
Okay, well, let's get you some money market views. Let's see, the rupee actually, it has been stable around that 69.80, 69.85 mark. Mohan Shenoy of Kotak Mahindra Bank says fears of trade wars turning into a currency war is inducing volatility in currency markets. The dollar index, after registering a high of around 97, has now receded to 95 levels, where it is expected to find good support. Mohan expects the dollar INR pair to trade in a range of 69.70 to 70 against the dollar today.
On bonds, Mohan Shenoy adds that the rise in crude prices overnight and pressure on rupee is negative. He expects the yield of the 10-year bond to trade in a range of 7.82 to 7.87 today. Yeah, the bond markets should react a little negatively.
Okay, let's talk about the global markets then. We have, of course, 2 days of global cues to react to. Here's Nigel with the world view.
Well, the US markets, they ended mixed in yesterday's trading session. We had the Dow that was under some pressure, while the Nasdaq managed some gains. The streets were weighing really two factors. One is Trump's legal tangle, and in fact, the other factor is earnings have been quite good as well. The reason, though, that the Nasdaq did outperform is because a couple of stocks did well, the likes of Netflix as well as Amazon. Both of them ended with gains of around 1% to around 2%. But earnings has been good, and that played out even yesterday. You had Target that came out with a set of numbers. The stock ended high with a gain of close to around 4.5% to around 5% odd. In addition to this, there are reports that suggest that maybe, in fact, the United States and Mexico, they're going to go in for a handshake, and maybe that long-awaited NAFTA deal could be solved. So that is one factor that's playing on the markets as well. The bad news for us is that crude prices have spiked up a tad bit in the last couple of trading sessions. The inventory drawdown was higher than anticipated, and that explains that. The dollar, though, that's weakened a tad bit on the back of Trump's legal worries, and that's why, in fact, it's moving towards that 95-odd mark. In terms of the European markets, well, we had a more or less flattish to mildly positive close in yesterday's trade. Auto stocks, they were under some pressure. President Trump has said he's looking at putting a 25% tariff on all European imports. So a lot of those stocks were under some pressure. Asian markets, though, they're mixed today. You have the Hang Seng that was under some pressure. The SGX Nifty, though, is indicating a flattish start. Back to you all.
Okay, Nigel, thanks a lot for that. In fact, the Hang Seng is down quite a bit from the high, so just keep an eye out on that. There's quite a bit of red tick that you're seeing in some of those Asian markets this morning. But minutes of the minutes released of the August Fed meeting revealed deepening concerns that escalating trade wars could hurt the economy. The FOMC members remain fairly confident that the strong economic growth will continue, at least over the near term, and that's what makes people believe that another rate hike is coming. Officials said it would likely soon be appropriate to take another step in removing policy accommodation, an indicator for a looming rate hike that's widely expected by the markets. However, now all eyes will be on the Fed Reserve Chairman Jerome Powell, who will deliver a key policy address tomorrow at the Central Bankers Annual Symposium in Jackson Hole. So hear out what former Fed Governor Randy Kroszner had to say.
I think the chairman is likely to steer clear of those issues. I don't think he wants to talk about the dollar, and I don't think he wants to talk about the trade tensions. If you think back to his recent testimony, whenever he was asked about these issues, he basically said, "I'll stay in my lane, you stay in yours." And so, you know, we don't do trade policy at the Fed, and so that's for you to focus on. So I think he's just going to keep on repeating the idea that the economy is strengthening, that the labor markets are tight, and that they need to continue their gradual path of rate hikes to make sure they stay ahead of the inflation curve. I think the growth overall is still very strong. Certainly the housing number is a bit disappointing, but part of that also is because of some supply constraints, and so we will have to see how that plays out over time. But I think most private sector forecasters have a 3 handle on growth for the current quarter, and we grew at more than 4% last quarter, so we're still on track for a pretty strong 2018. If there were an escalation in so the trade disputes, that might have an impact on the macro performance of the U.S. But at least so far, there's very little evidence of that, and I think they acknowledge that in the minutes, that at least so far, there really hasn't been an impact. But they're looking for risks that could impact the U.S., whether it's in trade or some sort of jitters in the emerging markets that might flow back to the U.S.